Thank you all for joining us this evening. My name is Femila Desai. I am part of the Retail Client Services team here at 274 Investment Managers. Joining me on the call this evening is Werner Apperman, Head of Alternative Strategies at 274 and Director of Agrarius. We also have Johan Fourie, Legal Counsel for Agrarius. I must say the response to Agrarius has been phenomenal. We are so excited about developing it. Over the past couple of months, we have visited every corner of the country, talking to both the investor and farming communities, and the engagements have been enlightening. This webinar will be useful to those that have attended these roadshows, as well as investors we weren't able to reach during those in-person engagements. So we will try to cover the frequently asked questions we've been receiving, and we'll also take yours. Please submit your questions in the Q&A panel. You can do so anonymously or provide us with your name. To get straight into it, welcome, Werner. How are you this evening?
Thanks, Mina. I'm doing quite well.
Good. Let's start from the top. Who is Agrarius Sustainability Engineered?
So Agrarius is a division of 274 Group that focuses on investing in the agricultural sector. So what we've established now is the Agrarius Sustainability Investment Vehicle. That's a ring-fence company that will be issuing instruments that will be listed on the JSE. That's what we create a vehicle for investors to gain access to the agricultural value chain.
Okay. And is this really the first Sharia compliant sustainability related sukuk listing on the Johannesburg Stock Exchange?
Yes, this is actually quite a new instrument, and it's breaking a few new areas. So first of all, it's the first local currency sukuk to list on the JSE. And secondly, it's among the first sustainability-linked instruments to list on the JSE post the new rules that was announced in March. So we're offering both Sharia-compliant investing, while at the same time offering sustainability objectives. So it's both Sharia and non-Sharia investors. And for both of them, we're offering a very unique access to the agricultural value chain. So there's a few unique aspects around this instrument.
So it's not a fund. Is it a listing on the stock exchange? What does it mean for investors?
So this is correct. It's not a fund. It's a specific instrument that's listed on the JSE and will be traded. So investors can buy this instrument, gain access and economic benefit by holding this instrument that's generated across the value chain, and then they can buy and sell this instrument just like any other listed instrument on the JSE. So it gives you a bit more optionality and flexibility compared to a traditional fund.
Werner, like any share or instrument, investors need a stockbroking service to invest. What exactly is a stockbroker, and how would investors access one?
So I'm just going to be oversimplifying it. So yes, I might make some comments that's technically not correct, but it helps to explain the concept. So the JSE is just a marketplace where you can buy and sell investments. Think of it as a Facebook marketplace or a Gumtree where people are selling stuff. Now, one of the problems you all probably experience by buying things on Facebook or a marketplace or Gumtree, there's always a bit of uncertainty if the person selling something is honest. Is he lying to you? Is the real good? Is the item of advertising really as described? So one solution would be to get an intermediary in between it to vouch for both parties. So a stockbroker fulfills that function in a marketplace. It's almost like you see something on Facebook, instead of approaching a person directly and asking to buy it, you approach a stockbroker. The stockbroker will go and verify the instrument or whatever you want to buy on Facebook, make sure it's as described, and then buy it on your behalf, given the price guidance you provided, and then you can give the capital to the stockbroker, your money to the stockbroker, and everything settles. So effectively, the JSE creates a platform where you can discover market pricing, so it's price discovery, and it creates certainty and trust among all entities because the stockbrokers are acting as the intermediaries in between it. So if you buy something, you know what you are buying, you will get, as it says in the tin, and when you sell something, you know you will get your money. So that's the function that the stockbroker fulfills. And for that reason, you need to have a stockbroker. A stockbroker is a very highly regulated environment, and they need to be approved by a JSE and put on their own capital at risk to ensure the market works efficiently. So yes, that's why you would need to buy us via a stockbroker.
Thank you for that. One of the most common questions we would get from investors investors, what exactly, or maybe if you can just elaborate, what exactly is a sukuk note?
Sure. A sukuk in the general term would be seen as a Sharia compliant fixed income instrument or a bond. So in a traditional sense, a bond is an instrument where you would give money to a company or a government, and in return they promise you to make interest payments either monthly or biannually or at maturity. They will give you interest payments plus they'll give you your capital back. A bond tends to be backed by debt or some other forms of immaterial assets. A sukuk has a similar return profile. It's a certificate, or in this case, the material certificate, which you will be buying, and issued by an entity, and that entity will promise to give you a profit share instead of interest on a period term of time, and at a maturity, they will buy back the certificate from you and you get your capital back. So because the return profile of a sukuk is very similar to the return profile of a fixed income instrument, people would say a sukuk is just a Sharia compliant bond. There's actually a bit more nuances around it. First of all, a sukuk represents your proportional right to a profit share of some asset generating profit. Now, in most cases, the most common ones would be like property. So you've got a portion only of a building, and the rental income is your profit share you get via sukuk profit declarations. In our case, the profits are agricultural assets or services being delivered, and that's the profit that you will have a right to participate in. So yes, that's it in a nutshell what a sukuk is.
Perfect, thank you. Vedna, I do know that we have some projects in the pipeline. May you kindly share some of those examples with the audience?
Sure. We've got actually a few projects currently active, which we have already deployed capital, and some of them are actually maturing, and we'll just roll them. And then we've got some new pipelines we're currently working on. So we've got one project is literally now just completed, and last money is coming in. Is we provided the capital for an entity to go and purchase fresh mangoes towards the end of the season. Normally what happens towards the end of the season, the mango price drops so significantly, it's not always profitable for farmers in remote areas to harvest the mangoes, package the mangoes, bring them to the market, because if there's oversupply, the price drops significantly and doesn't make economic sense. So what we were able to do is we provide a large, discharge amount of capital for the entity to go and purchase the mangoes, put it in cold storage, and then every week they would draw some of the cold storage, the mangoes from cold storage, they would peel them, they would slice them and then dry them, package them and ship them to some brands you can buy from Africa, but a bulk of it were exported to the international market. The benefit of this is, first of all, there's less food wastage, so we literally reduce the food wastage. Secondly, previously the entity we were partnering with only had enough capital to be operational for 6 to 8 months. The capital enabled them to be operational for almost a full year, and at maximum capacity. And it also significantly, so it creates more jobs, or more skilled jobs, right through the year, as well as increase their profit margin, which increase their sustainability to stay around as a business. And hopefully we will roll this transaction this year with a larger amount, and they can actually increase to high capacity. So that's just one transaction. It's currently in the pipeline, it's maturing. And Pim, I think you joined me this Saturday, where we were looking at a potato transaction for a farmer that supplies Simba chips or potatoes for Simba chips. And this specific farmer produces around 500, the potatoes he produces generates 500 million bags of Simba chips. So effectively, almost everyone in South Africa has that exposure to this specific farmer. And that's just this one transaction that's currently in the pipeline. We're looking at some transactions very specifically in feedlots around cattle, both to source cattle from previously developed communities, all the way through to supporting butcheries in remote parts of the country. And a large part of our operations is the financing of export for high quality food or high value food, mostly to Europe, America, Middle East, and Asia. So to generate some hard currency, foreign euros and dollars for South Africa. And that's just among the few ones. We also have looking at importing specific chemicals, from fertilizer to chemical food additives to increase the shelf life of food products, and even to some cases to wool to increase the material. So there's quite a wide range of projects in the pipeline.
Verna, I've just got two questions that popped up on my screen here. It's from an anonymous. In the Agrarius Sukuk note, what will the profit sharing percentage be?
So the profit sharing percentage will actually be determined in the next 2 days. So if all goes to plan, our book pool will open imminently. And during that book pool, people can participate by subscribing to these notes, by giving indication how much money they want to invest and the rate they would like to see. So our indicative rate, would we say, is between what we call as JIBAR, 3 months Bazaar JIBAR, plus about 4 to 5%. So what this means is it's just a benchmark. So currently the benchmark JIBAR rate, 3 months, is about 6.5% rounded down. If we add the expected 4 to 5%, we're looking around about 10 to 11.5% is the expected indicative profit share that will be struck in the next couple of days. And that's linked to the current market instruments, Sharia compliant instruments with similar duration in the market. And that's roughly what we can expect.
Okay. I have another few questions, Verna, but before I get to that, if you can just, this question just popped up literally. What makes Agrarius Sharia compliant, and would this mean only Islamic investors can participate?
Sure. So it's actually compliant on multiple levels. So when I started this project, I thought it's going to be relatively easy. It's just not to focus, just don't do any interest and just don't do pork and wine, and it's simple. But as we delve in deeper, there's actually a lot more things that make it compliant. And as we started the project, we thought, oh, we're never going to get this thing compliant. And there's all these new rules. And as we work for all the rules, it actually makes sense. The rules are there for a reason. So if we just quickly unpack it, the first one we will pick up is the overall structure. In other words, the Agrarius instrument, there's a sukuk, and the vehicles behind it is Sharia compliant, plus all the legal contracts that set up the vehicle you invest is compliant. And then down to the bottom line, each individual transaction that we engage with, be it a farmer, be it an agri-processing plant, be it a retailer, anyone in the value chain, we do it on Sharia principles to make sure it's Sharia compliant the entire way through. Each transaction, so the overall structure has been signed off by our independent Sharia board. Each instrument we issued, there's quite a few steps we need to pass through, which is the board will also sign off. And each transaction, as the transactions start, we start to engage with our Sharia board, get the advice how to structure it. Then this advice gets passed through to our legal teams. We draft the final contracts, and then it goes back to the Sharia board for final sign-off, and our Sharia committee to sign off to make sure each and every component is Sharia compliant. And there's actually quite some benefits of it. One benefit, we probably all know about capital adequacy requirements in the banking sector as well as the insurance sector, where a bank needs to have certain capital in reserves. And there's actually what we have to have is at least a 30% real assets in this investment, in this structure. And that is basically, it generates the same effect to it. And then there's all these small things that first glance make more confusing, but once you think through it, it actually makes it clever to make it full school function, and that works quite well. So there's Sharia compliant for multiple reasons, and being Sharia compliant adds a lot of benefits. And this is that the benefits flows through to non-Sharia investors. So non-Sharia investors can still invest in an instrument. They'll get the same returns, which is quite a decent return. They'll get the impact benefits of proper impacts in vehicle. And thirdly, some of the Sharia ideas and structuring that we do makes it almost to the benefit of the note holder or the investor, and they will also benefit from it, even by not being a Muslim investor. Being a Muslim investor, non-Muslim investor, one of the core principles of Sharia is everyone must be treated equally and the same.
Thank you, Verna. Verna, the investor that wants to participate in the inaugural issue of the Agrarius Sukuk, if you can just give us or let our audience know what the minimum requirement would be for the inaugural issue, and then obviously following that, the face value of the Sukuk after we've listed.
Sure. So our inaugural issuance is only open to sophisticated investors. It's not open to the entire public. For that reason, one of the reasons how we test from a sophisticated is the minimum investment amount is R1 million. So it will be our minimum investment amount. If you want to participate, you can just contact via our website. You can call your stockbroker. They'll be in touch with us or with our book builders more, and we will still be a process for you to invest. one of the key things that we also want to achieve post the listing is what we call the democratizing of Sharia compliant investing. We would like to offer a mandatory access to a highly regulated vehicle that's very secure and easily accessible. For that reason, the face value of each instrument is only 10,000 Rand. So that means you can buy it by your bank stockbroker or any other more advanced stockbroker, and to enable easy access for anyone any man on the street post the listing.
Another anonymous question, Werner. Are you only dealing in South Africa? Are your deals only in South Africa?
So our transactions is biased towards South Africa, just because we are South Africans and we would like to benefit South Africans. Specifically, we're investing in the rural parts of South Africa, as most investments you can buy in a JSE benefits the cities, the more larger areas. So we're literally using a JSE to channel capital to rural parts and create economic activity in rural parts of South Africa. So we are biased towards South Africa, although our management is a bit broader. So we will look outside our borders. Specifically, it might be for acquiring fruit in Mozambique to come to South Africa for processing or further export. The same thing for acquiring cattle from Botswana and Namibia to import South Africa for beneficiation, and in certain times, because a lot of the transactions between exporting its products, we might go a bit past our borders and participate along the value chain going further.
Okay.
But wherever there's good opportunities, we can invest with a bias to SA.
Perfect. Werner, just a quick question, which is another one that just came through anonymously. Where can we find Agrarius on the Johannesburg Stock Exchange?
So Agrarius will be listed on the debt market of the JSE, specifically in the sustainability segment. It's a fairly new segment. And once it's listed, you can just use your, like it sits for any share, you can just use the word Agrarius, or you can use the ticker, which will be Agri, and there will be two codes added to it, like most probably like A1, is for the first instrument. But by using a ticker Agri with most online platforms, it should pop up on the list.
Thank you. Another question. If Agrarius Sukuk note cost is 10,000 per note and the profit sharing percentage is 10% per annum, will the payment to the note holder be 1,000 rands per year for 3 years and a return of capital investment after 3 years?
So let me just quickly double check calculations. So
10,000
if the
per
face
note
value is 10,000 Rand and the agreed on profit participation is 10% per annum, that will mean, just for oversimplifying it, so we're doing a profit declaration twice a year. That will mean every 6 months you'll get a participation of 500 Rand. So it's just the 10,000 times 10%, which is 1,000, divided by 2. So that's your 500 Rand every 6 months. And then at maturity of the instrument, you'll get your final 500 Rand profit participation, and you will give us the Sukuk certificate back, and Agrarius will give you your 10,000 Rand back. That's in a nutshell how it will work based on this data you provided me with. Or the question you provided us with.
Sure. And then the term of the Sukuk note, we can safely say that that is over 3 years. So that's for 3 years, right?
That's correct. The investment right, the term is 36 months, so 3 years.
36 months. Thank you. Werner, can you explain the sustainable nature of Agrarius? So how does it compare from an ESG perspective?
Sure. So in a nutshell, the Agrarius mission is to transform the agricultural sector from an extractive economy to a circular economy by mobilizing pools of capital to the right projects that will achieve that goal. And to achieve that goal, there's two main components to it. So we are issuing a Sukuk, which will be classified as a sustainability linked one. Based on our 10 billion overall program memorandum, we can issue also call it green Sukuk. So it's not just sustainability instruments, it can be transition Sukuks, all different kinds of what we call nowadays green finance. So these are fixed income instruments that is at first of all needs to have a commercial return, so that's all your 10%, while at the same time doing good. And this doing good is defined in the documentation. So that might, for our first case, would be to invest in agricultural businesses that meet certain environmental standards. In this case, it might be something like Global Gap, Rainforest Alliance. So the way the items are produced, it first looks after the environment to ensure sustainability, but continues to improve the operations and sustainability. It looks at the social aspects, so how workers are treated, the work environment of the workers, all those kind of aspects. So there's, for each instrument we issue, there will be specific sustainability objectives. It might be to finance renewable energy in the next round, or it might be to look at and see how we can create jobs in rural areas, or how we can focus to transform the sector by getting more women in senior management positions in the agricultural chain. So there's very clearly defined sustainability objectives we would like to achieve, and these objectives get independently verified. In this case, our consultant or is IBIS. So IBIS function is literally to look at the documentation we provided, give a second party opinion to ensure it meets sustainability criteria, and then every year they will do like an audit to ensure that we achieve these objectives. And what makes this a bit further unique is if we don't achieve those objectives, there's actually a financial penalty that the Agrarius needs to pay. And it's directly linked to investment team. So it will literally impact people by not achieving our objectives. So that's just in a nutshell how we do our sustainability objectives. But then secondly, the second aspect is how we make investments. So yes, this is what we want to achieve, but the second is there's a couple of pillars we look at. So yes, corporate governance is a key element from a risk management perspective. So if you think about it, we're doing sort of a credit investment. So we need to make sure there's good corporate governance in place. So that immediately links to the G of ESG. Then next is the economic sustainability. So you only want to invest in businesses that will grow and will be around. So that's also linked in the sustainability aspect. And then thirdly, you look at environmental aspects. So we're looking to businesses that are good for environment or minimize your harm. And then the fourth one, so we've got 4 pillars now. ESG is your social aspect. So how does workers treated, job creation, food security, well, specifically affordable food security. So it's part of our DNA, how we want to achieve our overall ESG objectives.
Thank you. Just a few more questions coming through very fast, Berna. What is the benefit of investing before the listing? So what's the benefit of coming through the inaugural issue before the listing?
So there's 2 benefits. The one benefit I can explain, the other benefit might not apply to everyone. It depends on your range of your stockbroker. The first benefit is, depending on the amount of people subscribing, there might be a limited volumes. We will not, it's not, even though we've got a 10 billion rand note program, we're not going to be issuing 10 billion rand in the next couple of days. We will limit it. So there will be a limited amount available. And the people who do buy it at the inaugural issue might not be willing to sell it. They will buy and hold it till maturity. So there might be limited availability in quantitative sizes post the listing, so you might not be able to fill the amount you would like to buy. And then on a case-by-case basis, if you do it before the listing, there might be no brokerage cost involved for you. Although it's a small amount, it's still a small benefit. It will just literally be placed into your account. So there's a small benefit for you on that side.
Another anonymous question, is the profit share fixed or variable?
So we actually engaged quite deeply on the market. Initially, we thought we're going to have a fixed profit share, but then later on, the market said this is quite a unique product, and you can see it's quite a lot of flexibility and robustness built in it. There's currently all the Shari'ah products, or the majority of the Shari'ah products in the market are fixed, which means your institutional investors and your high individuals are struggling to properly build a portfolio that will hedge out their liabilities or manage their risk decently. So that's for that reason we decided to do a variable rate instrument. So that would mean now this will be one of the few Sharia compliant instruments that has a variable profit rate. So that means you can manage your portfolio much more efficiently. And what it also means is we are in a rate hiking cycle. So yes, we don't pay interest. We're just using it as a benchmark. So if the overall interest rates increases, by having a variable rate, you would also benefit from this increased period. Yes, when the rates come down, it will reduce, but remember, this is only a 3-year instrument. And a rate hiking cycle normally happens for quite an extensive period. And we only recently entered the rate hiking cycle. So probably if it reduces, it will probably only be towards the end of the instrument. Once again, I can't make a forecast. I'm just giving general reasons why we decided to go variable rate, because I think it will be most beneficial to investors or note holders.
A question, Berna, how do you define the agricultural value chain?
So the agricultural value chain is quite broad. If you think about it, agriculture touches our lives on a continuous basis all around. So from the clothes I'm wearing, from the wood table I'm sitting at, from everything around us, it's quite broad. So what we did is we broke it up in a few steps. So first of all, we are looking at the input extraction side. So that is literally from the components of fertilizers. Remember, there's the extraction out of the ground to get a component, like your phosphates. Then it's packaged to a specific mixture, which is then applied to your plants. So that's extraction input. Then what we determine is also a production part. So it's a production activities on your farm. So your primary agriculture, domestic in farms, which is the activities on the farms. Then it's like the initial high-level processing, just from the harvesting or the initial cleaning of the items. Then there's the more advanced processing, as the example I used that you do your mango production. So it's converting mangoes to dried mangoes, or from the typical production cycle of it. Then there's the next step is the distribution aspect. So specifically you're exporting your logistics around it. And then it's towards your commercial aspects of selling the items. And then we can continue all the way through to end of life, the recycling of products. So how can we minimize the wastage and where can we reuse? So that's the entire cycle. So it's basically from everything goes into a farm, something is on the farm, and everything that leaves the farm going forward until it reaches the consumer's plate or clothes or leather seats in his car.
This is a comment and a question, Werner. Investing in agriculture is complex. Does the Agrarius team have experience in the sector?
Sure, yes, agriculture is quite complex, and that's one of the reasons why you can generate a decent return. Because the complexity generates inefficiencies, and inefficiency leads to alpha opportunities. So the complexity creates opportunity, and that we are basically capturing the complexity based on our broad experience. So yes, we're running a portfolio for only about 2 years now with decent returns, but we are supported by quite a broader team. Some of the team members on a care committee are approaching over 20 years experience. We've got specialist agricultural advisors that are consulting both to agricultural entities from primary farmers. The same guys are consulting to our large banks with their risk modeling and their credit modeling, as well as some of our large investment firms for the more complex projects. And all of those guys are part of an investment team. So we've got quite a broad team with deep experience in agricultural and investment cycle, which can use to capture the specific opportunity to make it investable for investors.
Werner, I had a few requests. Our attendees would like to know who's on our Sharia board. Can you please just mention?
Our Sharia board is chaired by Mufti Ahmed Suleiman. It's supported by Mufti Ashraf and Mufti Patel. And then we've also got our internal Mufti Hafaji. He's one of our first contacts to help me explain some of my new details around Sharia investing, just to get the basics right before I approach our Sharia board. So don't waste their time on these basic items. So that's the three main members, supported by Mufti Hafaji.
Perfect, thank you. Werner, if we can just let our listeners, give our listeners a little bit more information on Agrarius, or if they want to get into Agrarius, how can they get started?
So I think the most easiest way would just be go to 274/Agrarius, or just go to 274.com. Just go a little bit down. It's like on our homepage, there's a link to Agrarius. That's it, let's grow. Click on it. There's a lot of information on that. And if you scroll a little bit down, you'll get to our investor center. And there's all the technical documents and the legal lease documents accessible. And if you really want to, and if you prefer not using websites, you can contact us. We can email it for you, or give us access to a data room. So it's easy, flexible. One of the easy ways to get hold of us is just to email agrarius@274.com, and then the right person will respond. We've got a WhatsApp line. You can call us. It's quite easy to access us.
If I can just touch on this question that came through, Werner, I know you have mentioned, or you have touched a bit on it. The question is, if you do better than you expect, will we get an additional profit share dividend at the end of the 3-year term? What happens if Agrarius doesn't do as well as you anticipate? Will our annual dividends decline?
Sure. So unfortunately, no investment is risk-free. So there is some risk in this investment. So we've got different ways of managing the risk. But let's just first talk about the profit. So let's, for argument's sake, say the instrument, the profit share will get struck in the next day or two at a profit rate of 10%. What we will do is the money will flow to our investment operational entity. And from there on, we will be engaging different kind of transactions by buying fruit, selling fruit, buying cattle, all those kind of activities on Sharia principles. And as for argument's sake, we aim to achieve a profit participation of 15%. So first of all, our profit participation will also, it's not unlimited. It's limited to a fair amount, a fair and just price. So we don't earn exorbitant profits in our transactions because we want to achieve benefit to our counterparties we engage with. So that means there's what we call a spread of 5%. Over the 15% we earn and the 10% that we pay the investors. So that 5% spread, first of all, go to cover costs. Yes, investors SARS get paid first if there's any tax liabilities. Investors get paid second, and then there's certain expenses you have to cover. Being a listed vehicle and currently still a small phase, the operational cost is quite extreme from a vehicle perspective. So our audit fees are quite high, the legal fees is high, the maintaining the listing is quite high, the independent advisors to ensure sustainability also need to earn their fair share. So let's assume that it generates a profit of cost of about 3%. That leaves about 2%. So 2004 is entitled to a management fee of 1.5%. That 1.5% goes to cover the investment costs. So it means traveling to the farms, doing the analysis, paying salaries, getting all those things in place. That's our operational cost. So in this example, there's 50 or 0.5% left. That 0.5% we can call 2004's performance fee, but we can't take it out. That needs to remain behind in the investment vehicle as a first loss tranche. So in case there's any losses being made, that called the performance fee will be used to cover those losses as the first part. Alternatively, if the costs are a bit higher, then there's no performance fee, the 2004's management fee will decline. So it's a fair structure, so fairly aligned in. So that's the first reason why there's a cap to your profit, because it's quite limited, the profit that can be earned here. Then the second question talks about potential losses. So given that we've built in quite a hefty margin, it's highly unlikely that there will be losses in this investment. But when we do our transactions, we are quite careful on where we invest. And secondly, all our transactions we built in a safety buffer. So if we expect a harvest to generate R1 million based on a fixed price agreement, so we don't take any price risk, we will only in a best case scenario risk 600,000 rand. In other words, we only invest 600,000 rand. So there's a 400,000 rand safety buffer built in the primary engagement angle around it when we engage in transactions. And that buffer is transferred to a security SPV. Secondly, where possible, we take additional security. We keep it simple. If we engage with a farmer and we're buying a potato harvest and there's a butternut harvest, we will take a session on the butternut harvest as well, just to make sure that let's say it's a long contract and the harvest failed, the farmer is supposed to give us back our capital, just to make sure it's enough money and there's enough assets to give us our capital back, and then also the property. All of that's packaged into a security SPV. That security SPV gives a best effort guarantee to all the investors. So it's only in a really, really worst case scenario that there can be potential losses. And what our definition, our modeling, what we expect to be is not really capital losses, but let's, for example, say the agreement was for 3 years with a profit valuation of 10%, and something really, really goes wrong. We need to liquidate some assets. So we might be able to give you your money back at 46 months. It might be 38 months or 40 months as we have to liquidate assets. But given that we built a very robust system with assets backing it normally between 1 to 2, 1 to 3, depending on how we measure it, there's some more than sufficient assets backing the investment. So we don't expect investors to suffer losses. But once again, it's not risk-free. And there is some risk. Otherwise, we won't be able to generate any returns.
Thank you. That answers that question in much detail. Verna, a question that's come through: who is on your board of directors? Who are the board of directors for Agrarius? So
our board of directors at a LISCO level. So I'm the executive director. So I'm executive director. Victor Priya is our chief operating officer 2004. He's the director. And Warren Tragurta is also an executive director. So Vic has been with 2004 since its founding, about 15 years ago. Warren is a CA, CFA with experience in London, London and other corporate entities. He's also well experienced in the farming community. He has his own private investment firm focusing on agricultural aspects. And as the executive directors, the independent directors is well known. It's Solly Noor. He's a well-known property investor, philanthropist, well across the country. We've also got Farsana. She's also a private equity experienced person, also a CISA. And then we've got Fairuz. She is also a CISA, and she's actually the chairman of the Zakat Association in South Africa. So she's also quite useful for us in our social objectives we would like to achieve based on her experience.
Berna, will Agrarius be liquid? That's one of our questions that just came through.
So yeah, so Agrarius, given the small sizes of only 10,000 rand, people will be able to sell small portions. So whether it be institutional or a retail or an individual, you can sell small portions of your investments instead of typical instruments that trade millions. Because the small amounts being sold, it should generate a bit more liquidity in the market. What we tend to find, if we look globally, there's an undersupply of Sukuk instruments in the world. So there's more demand than supply. So from in the basic definition of liquidity is if you decide to sell something, can you sell at the prevailing market price or up within the market? So given the fact that we expect there to be more demand than supply, there should be liquidity. And we are engaging to see if we can arrange for some market makers. But that's unfortunately a bit more complex discussion. We need to have to make sure in line with the JSE rules and regulations. So we expect it to be liquidity, but we can't guarantee it, but we'll do our best to facilitate it.
And we have a question on the credit committee. Who is on your credit committee? Sure.
So our credit committee, we've also well-known entities. So we've got 2 external and 2 internal people. The first external person is Johanna Kersel. She's also well-known in the industry. She was a head of credit at Ashburton, head of credit at Sanlam, many years of experience. We've got Morne Visser. He's currently head of credit at Absa Alternatives. So we've got basically years of experience with local market insight to see what's happening in the market and advise us from what actually we do. And then we've got Rory Ord and Chad Potter. They are the team people on our private equity division. So they bring a bit of an equity angle and a bit of other insight to it. So that these 4 people quite challenging us, and I tend to say almost no for all my applications. So it's a well-experienced credit committee.
Thank you, Werner. There's a question that just came through. When is Agrarius listing?
So if all goes to plan, the listing would happen next week on the 24th, Tuesday the 24th.
Of October. Okay.
Sorry,
Werner, I think I don't have any more questions that's come through. We may have answered all of them. Yeah. I think we've answered all our questions so far, Werner. I think that this is all the time that we have for today. Any final notes from your end?
Yes, I've noticed that we had some issues on our Q&A session, and I'm sorry, I'm based in Joburg and our internet's been off. If it didn't answer your question, please just send us an email to agrarius@274 and we will definitely get back to you. Or just on go274.com, look at our WhatsApps, and we will answer all your questions. That's all the comments I have from my side.
Thank you. This has been extremely valuable, and I hope that the session has provided much clarity to all our listeners. The session has been recorded, so if you do need a copy, a recap of anything, and you wish to pass it on to family, friends, colleagues, please check our YouTube channel. Please also feel free to reach out to us on our website, 274.com/Agrarius, on email at agrarius@274.com. Thank you so much, and a good evening further.